Hi, everybody, and welcome to Realty Success. We are so excited today. We've got a great guest, and you're going to have a lot of fun with us. My name is Brooke Bryant. I'm one of the hosts of Realty Success. I'm a realtor in the Charlotte, North Carolina area, and I work a lot with investors and home sellers, but love working with first-time home buyers. I have a book you can find on Amazon, The Ultimate Guide for First-Time Home Buyers, and I'll have a link to that at the end of the show. Joining me today is the beautiful Regina Brown. Regina, please say hello to everybody.
Thank you so much for having me today. I am Regina Brown. I am a luxury realtor here out of San Antonio, Texas. So, looking forward to some great information today. And over to you, Scott.
Well, good morning and hello. What a great today. Today is going to be so much fun. I'm so glad you're tuning in. We're getting to talk about one of my favorite topics, well, real estate. And how do you win it?
Scott, I would love to ask you a little bit about the debt to income ratio that's important.
So, debt to income. So, when a lender underwrites to the word yes, they've got to answer some questions. A law passed through that SAFE Act is called the Ability to Repay Law. This is important to know about. For any home that we're going to buy that we intend to live in, any lender that makes a loan to that type of consumer must validate by 8 specific steps their ability to repay that mortgage. Nobody gets to skip it. So that's very important. Part of how we answer if you can pay it is that we look at all of your debt. So, debt, credit cards, auto loans, student payments, commitments that take your money out of your wallet and puts it into somebody else's. Any form of debt that happens with, even if it's debt that's not on your credit report. So, debt, even looking at the new house you're buying, not just the mortgage payment, but that house has property taxes. It has homeowners insurance. It has things that will create debt. So we're going to look at all of the debt that you would take on after you became that homeowner. And then we're going to say, how much is that debt against all of the income you bring in? So we call that a debt to income ratio. When it comes to underwriting risk, most of us are going to use a federally backed loan in today's climate. And we use automated underwriting. Automated underwriting uses technology to make credit decisions rapidly. The debt to income it allows a consumer to have is now based on a multitude of measurements that relate to the consumer. So one consumer may be able to use, let's say, 43% of all of the income they have to speak to debt. But then another buyer looking to buy that same house, they might be able to use 47% and get approved where the other one didn't. But I'm looking at the same house. And that's because everybody's an individual. What money do I have left over after I own the house? What credit score did I have when I applied to get the house? There are so many questions that get asked that help to answer how you get to do it. Debt to income is such an important piece to that. So, debt. When we look at the debt, when we're thinking about home financing, you can imagine that you, as the home buyer, will be better benefited by not adopting new debt. The less debt we have, the better we're going to be at getting there, yes, because more of our income can focus on the house, not on a car or an auto or something else. So that will empower you. When we go to buy a home and we exceed what they call their debt to income level allotment, let's say they allowed me to use 45% of what I earn. In the house I found I'm at 46. Well, that doesn't mean you can't have it. Remember that mortgage broker you were working with? Well, guess what? They're going to be able to do differently for you other than say no. They're going to review your credit and they're going to find an opportunity to reduce some of your debt. And while you're in an active escrow, I can rescore you. So I can take your credit report and I can take data that's no longer accurate and make it accurate to right now. Normally, we have to wait 30 to 45 days to update data quickly in a credit. But when we're in an escrow, I can do it in less than 5 business days. So I can go from no to yes rapidly if we get stuck in an income level. And so can you by reviewing the debt that's being looked at and seeing if you have the ability to reduce the debt. Sometimes we're empowered by taking the debt, paying it down instead of making a larger down payment, maybe I'll take down payment dollars and make those debt reduction dollars so I can get to yes. Life has creative paths, but the debt that we carry in life is what they're going to measure first. And everybody's version of how they're going to be looked at depends on how you started hello.
What a great takeaway.
Thank you so much.
No, you're super welcome.
I really hope that everybody takes away from this that yes, you can. You just have to find the right people to get you there. And one of those people is Scott Griffin.
I'm a national television host on Bloomberg Television as well. I'm also on CNBC and Fox Business. The show's called Financing the American Dream. And it's a really fun place to explore real estate lifestyles and communities throughout America. So you'll find me on television. You'll find me on Apple, Roku, streaming on your local streams. 818-20-SCOTT. What a fun phone number. Who gets 818-20-SCOTT? Well, I did back in 1997. So 818-20-SCOTT. We'll talk directly. And scottgriffin.com is another fun way to find hello. And thank you again for inviting me today. I love what you're up to. I love what you inspire and invite. And none of this would have been possible today without your inspiration. Thank you.
Well, thank you. And to the lovely Regina.
Thank you so much, Brooke and Scott. Again, Regina Brown here out of San Antonio, Texas. You can find me on all of the social medias. And you're ever looking to buy or sell here in San Antonio, I would love to help you out.